All right, hey everyone, I got something really cool today. I'm having to sit down with an old friend, Adam Walker of Walker Mortgages. He's been helping people buy homes for how long?
17 years I've been in this business now, yeah.
So you've been grinding. I've been 15 years. So
Yeah.
you're actually at it even
A
before.
couple years
I
before.
got into it. That's
Yeah,
awesome.
yeah.
And recently you branched out. You did a lot of your career with CIBC and you've gone out to become an independent mortgage broker.
Yes.
So
Yeah.
now you're free to kind of help with all kinds of additional products.
We're here for clients, though, not for shareholders.
Yeah,
Right?
amazing.
Kind of the
So,
big difference.
This is cool. We recently reconnected and we were talking about all the ways and the different challenges that are happening in the market right now. And we said, hey, we should just get on camera and talk about some of this to let the consumers know.
There's a lot of great things that we shared, a lot of great stories, some tactics and tips, right? So, yeah, rather than keeping it between us, let's share with everybody.
Yeah, so I'm sure this conversation will go all over the place, but let's get right into it. Like, what do you see as the biggest challenge your clients and the realtors who send you clients are facing right now in today's marketplace?
Yeah, the biggest challenge right now, I think the biggest myth that we're seeing right now is a lot of bad advice, right? How much do you need for that down payment, right? How do we get into the housing market? And one of the biggest ones is a lot of people are still being told, like I was told when I bought my first house, you got to have 20%, right? And when you look back, maybe previous to 2016, it was a bigger advantage back then to have 20% because you didn't get a lower rate, right? Now you do save some money on rate. And the biggest thing is you can get in the market, right? I don't know what kind of GICs or mutual funds that you see out there, but nothing's gaining appreciation faster than the housing market.
And with the price of homes, 17 years, 15 years, we've seen the cost of the average home, especially in our communities, go from like 150 grand
Yes.
to now 650, 700 grand for that same house. So 20% down is now really an unattainable number for a lot of first-time home buyers.
It's nearly impossible, right? It really is nearly impossible. And like I said, there's nothing that's going to gain equity faster than or gain money faster than the equity in your property, right?
So you're saying instead of saving up the 20%, you'd be better to get in at 5% with the programs available to you. Yeah. And that the growth in that home is going to happen faster than you could have saved to get the 20%.
Absolutely. Well, if you think about it, right? So let's take COVID out of the mix, right? Like if we take COVID, that was a little silly season, but let's go back 2015, right? If you look at the average house in 2015, if you decided I'm going to wait and save 20% down, right? Okay. How long is that going to take you? Let's say, maybe I've got, 5% down. I need to save an extra 15%. I got to save an extra $100,000. One, with today's rent prices, how are you doing that? Right? It's really hard to save an extra 50, right? Absolutely. Yeah. So now I've wasted 5 years in my parents' basement. I've saved an extra 15%. If housing prices, if we look 2015 to 3 years, 2018, now you've saved 20%, you're buying the same house, right? And you've missed all of the equity that you could have gained in buying that property, right? Exactly. And there's different tools and programs now, like buy that duplex, right? Like if I could go back and make one difference in the first house I bought, I wish I had something with rental income, right? And we're seeing a lot of people doing that now where they're buying that first house. People are renting garages now, right? You can rent a detached garage and get some of that to supplement that income. There's a lot of different options out there to get into the housing market. You can't just be like the old one. We just want to get into I want my parents' house from day one, right? That's not an option anymore, right? You need to start, and get a little bit creative, start gaining that equity. Buy a house with friends. Maybe it doesn't have to always be a spouse or a significant other you're buying that house with. Buying with friends sometimes can help offset different costs.
Yeah, I remember back to, I wasn't the owner, but my first house I moved into out of college, I was a tenant. My friend owned the house and me and another guy rented rooms. So we were at that time giving him $310 each, I think, a month plus utilities. And that really allowed him to become a homeowner one kind of whole cycle earlier than the rest of us, which was kind of cool to see. It really inspired me to get out of that and get my first home. But again, the prices are, even then I put 5% down, but looking at it today, I don't know how I would have even afforded 20% down back when prices were only 200 grand for that house.
Yeah. Nearly impossible today, right? 200 grand, then 600, that same house is probably 600 grand now easily, right? How do you save that extra money where that $200,000 house, $400,000 in equity that you could have gained, right? That's going to help you. That's going to, you're talking about generational wealth, right? Like you're really talking about a big difference in wealth that's there. And that can help you now springboard into other things, right? Now you can start taking the equity out of that, buying a rental portfolio, starting an investment program. There's so many things you can do by getting started with that 5% down.
Definitely. And the whole myth around why the state, it's really about trying to avoid paying that insurance fee, right?
Right.
That's why people.
That's the
try to
biggest
save up
thing. You
more.
don't want to pay a CMHC insurance fee, which is there, right? Like, and it's anywhere between, it can be between 2.8 to 4%, right? So it's significant cost, but it's added into your mortgage, right? So you're going to roll that in. It's not that you have to come up with, 4% extra for that down payment. You do have to pay the taxes on it up front, which is more than it used to be. It used to be a couple $100. Now we're $1,000 in taxes you have to pay up front. But you're getting into the housing market. It's giving you access to the housing market. And the other benefit that it has too is it protects our housing market, right? CMHC and Sagen and Canada Guarantee, they've got a lot of different programs that are there that protects our housing market. So when you're buying in, we kind of started around that 2008 timeframe. There wasn't those protections that were there then that are there now.
So playing off of that, right? We talk about, some of my advice, and it sounds like you're saying the same thing, is like we want to try to get into the housing market as young as possible. And these programs are designed. The Canadian Mortgage and Housing Corporation it's designed to try to help people get into the housing market. That's why these programs exist. But then the next piece of advice would be the sooner you can become a real estate investor. It's not just your primary residence, but you can somehow get a second asset as young as you can. So you also have creative programs to help that be able to happen a little bit sooner. Talk to me about that.
Yeah, so one of the biggest things, and maybe it's a little bit more popular, my kid's going away to college next year, how can we buy an investment property and start building that investment plan? So he's going away to school next year. I can buy a second property with as little as 5% down that he's going to live in on a rent-free basis, right? So now in 3 years when he's done college, that's now an investment property, right? Hopefully in 3 years that starts to gain equity, starts to grow in value. Now you can refinance that one. You can start building that investment portfolio, right? So there's a lot of strategies out there of how to get into the start building an investment portfolio.
And so the same kind of thing applies, like a smaller down payment, less than 20%, potentially even using equity out of the first property you bought.
Absolutely.
Right? And I think you're talking about kids going off to college. I just put a property up for rent in Guelph, and it was rented by 3 university students, and the rent is $31.50 a month. Yeah. Like, I don't know what rent was like when you were in college, but it wasn't that. I think we were paying $125 each. Yeah. I'm thinking, oh my God, how do you ever get ahead? You've got tuition and then another $12,000 a year in rent, where that could be going back into equity pay down and appreciation on your own property. It's a really smart move if you've got a parent to be able to support you in that type of move.
Well, we have clients right now too that are using that RESP money that they had that was going to, instead of using that RESP money to pay tuition, their kids are paying the tuition and they're buying the investment property. So when this is done, maybe the kid stays, if they're going to Guelph, maybe they stay in Guelph, right? And now that becomes their property that they have. And now they can rent out some rooms and it becomes an investment portfolio down the road. But at closing, it's just a secondary property for a family member to live in on a rent-free basis.
And that qualifies for the same program.
That qualifies for the 5% down now.
Yeah, I even remember my second property ever was a cottage. It was like a dream of mine, young. And I was able to buy it by pulling the 10% down payment out of my existing home that had gone up in value, and then qualifying for the CMHC secondary residence program or whatever.
Absolutely.
It's called. And I look back now and look at the growth on that cottage property, not only the lifestyle and the fun of enjoying it as a family, and it's never been an income property, we don't rent it, but just the appreciation of having that second asset, what that's done to my, legacy and my family's net worth.
It's huge.
Yeah.
It's huge, right? Absolute game changer. And people don't realize, May 24 is around the corner. People don't realize, like, instead of using somebody else's cottage, you can buy that with 5% down, right? People are, I'd love to buy an investment property, but I need 20% down. Well, you don't. You can buy it with as little as 5% down. And there's some programs out there to get some unique properties, right? It doesn't just have to be, a 4-season, if it's a 3-season cottage, it's, there's different options out there where you can do it with less than 20% down.
I think the whole point of both these topics we're talking about is there's a lot of misinformation, or a lot of people think that it's not going to happen to them.
Yes.
And another problem is, like, maybe you're going to come and talk to you, and today the answer is, oh, no, but you can still get a path that, oh, if you do A, B, and C in 6 months, you'll be ready to pull the trigger on that thing. And that's a much different strategy than just sitting back and going, this is never going to work for me. The system's fixed. I can't, I'm not going to be a property owner or a cottage owner. It's, just coming in and figuring out a plan with someone like you.
Well, it's funny. When we were at the bank, when I was back at the bank, we used to have questions. We'd ask everybody that came in.
Okay.
And one of the questions we asked is, have you ever thought about buying a second property, right? And almost everybody said yes. And when we asked, why haven't you? The answer we thought we were going to get is, oh, it's too risky, right? I don't want to get into the risk. The answer we got 90% of the time is they don't know how, right? So I just don't know how. I don't think it's for me. I've heard of all these other people that are buying these investment portfolios, and I've got people that do the same job as me, and but they've got way more toys, they've got way more spending money because they've got these investment portfolios. How are they doing it? And that's just it. They don't know how to. So if you want to learn how to, let's chat, right? Let's talk about those things, because there are strategies available for a lot of people to build that extra wealth.
Yeah, right. And the earlier you have that conversation, then you have that as a goal too, where even if it is a few years out in the future, maybe you make slightly different decisions. Maybe you don't upgrade that car right away.
Right.
Maybe you dial back a few years of family vacations, but you've got it on the horizon that it's because I'm going to pull the trigger on this investment property, or I'm saving up for that cottage or whatever. I think, that's the part that's missing is I think once people decide, oh, this isn't possible for me, they kind of write that in stone in their life.
Yes.
And then don't pursue it anymore.
Yes.
Yeah, totally. Yeah. Okay, I got to always not pivot while I'm looking at paper. Let's pivot a little bit and talk about the steps, the roadmap, because, buying a home has gotten more complicated. And I believe mostly because of the pace. I remember 15 years ago, it was a pretty relaxed process to go and shop for a home in Brantford and get your mortgage pre-approval.
Yes.
It all kind of happened one day at a time, but now it's go, go, go.
Very quickly.
Right? So pretend maybe that I'm a new buyer and walk me through hey, Jeff, get your ducks in line.
Yeah. So first step is going to be, don't go look at houses. Do not pass go. Do not collect $200. Get pre-approved. Right. And it's funny. We always hear the term, well, do I want to be pre-approved? Do I want to be pre-qualified? What's the difference? Is it a rate hold? What is it? And I'm, the difference between the two, really, everybody calls it something different, right? It might be a pre-approval, might be pre-qualified. What matters is what documents does your lender review, right? So if you're going into your bank, you're going to talk to your broker, you're coming to talk to me, what documents are reviewed? Because if you're not pre-approved with all of your documents being reviewed, it's not worth the paper it's written on, right? We want to review your credit, right? And sometimes people are scared. I don't want my credit reviewed because I've heard that it's going to have a big time negative effect on my credit. Well, if you're going to qualify for a mortgage, the one credit hit isn't going to affect your credit score enough to take that down, right? Most of your credit score is based on utilization and repayment history. That's where you really is. So if you've got lines of credit or credit cards, make sure you're under half utilization. Make sure you're making more than the minimum payment all the time. And it's not going to hurt your credit. And really what it's going to do is there's a lot of errors on credit bureaus, right? And it might be an old 407 bill. It might be an old Rogers bill. It could be anything that's on there. And if you've got a purchase and sale agreement and you've got a 7-day condition of finance and you have a mistake on your credit bureau that we've got to get fixed, it's not happening in 7 days, right? When you're going to Equifax or TransUnion, they're not quick moving, companies. They're not in the sales business. They'll get to it when they get to it. So if we can do that proper pre-approval up front, review your income documents, review your down payment, review your credit score, once you've submitted that offer, then you're in good shape, right? Now your life is a lot easier, right? When you're going and looking at those properties, you know what you can afford, right? Now we're not going out looking at properties at one price point, only to find out later I can only qualify later.
Super disappointing. Yeah.
Almost puts a stop rate in the whole program.
Yeah, because it's hard to take a downgrade for sure. And I think you said something that I want to key in on there is that the word pre-approval, what most people don't realize is that pre-approval is always coming with conditions because there's something left to do, whether it's appraise the house or whatever. But like you were saying, someone might be able to give you a pre-approval over the phone, but if you haven't physically put those documents in those files, it's pre-approval conditional on seeing your T4, seeing your credit report. And so you might as well get those steps out of the way now and build a really strong file so that your job can happen so much quicker. It's really just about the house at that point when the deal's coming together.
Well, at that point, so once we've pre-approved them, you go and do your job, right? You find them that house and you've got some really cool tools to help them find that dream home. Now your life's easy. Once you've submitted that offer, if you have a 60-second pre-approval that some of our competitors like to advertise, if you've done your pre-approval in 60 seconds, you're in for the most stressful week of your life. Right?
Finding all the documents.
Now you've got to find everything. You've got and a lot of questions are, what documents do I need? What is that document? How do I find that document? Well, one of the things we've done to make it easy is on our YouTube channel, we've got a sample of every document with not just, here's a picture of a T4, this is what you need. Here's what a T4 is. Here's the keys that you have to have on that T4. Here's on your pay stub, right? Like everybody loves to have a screenshot. A screenshot's the easiest thing to find in everything. When it comes to document collection, screenshots aren't your friends, right? A lot of times that screenshot of your bank statement doesn't have your name on it, right? It doesn't have your account number on it. It's got your balance, but doesn't, so we give samples of everything on there to make that easy. So when you're in that week, we've already collected everything. And now all that's left is maybe it took 2 months to find the house. We just need an updated pay stub. Right? Maybe some of those documents have got still dated. Your life's a lot easier, once we get there than it would be if you haven't had that pre-approval.
I totally remember I was going for, I forget why, maybe it was an approval on a rental property, but they wanted me to prove that I didn't have any back taxes owing on the properties I already own.
Yeah.
And one's here, one's in Bruce Peninsula, and those tax offices made me physically drive there to get the printout.
Yeah.
And so I get it, it's a stressful week because
that's easy to do when you don't have a condition of finance staring you in the face.
Yeah,
right?
But it still was I want to get this done. I had to get the paperwork, and the weekend's coming up, and it's so you're driving, I'm standing in line at City Hall just to get this piece of paper to prove
yes.
that I pay my taxes, which I do.
Yes.
But it can be much less stressful if that's all happening before you're under this is the house I want to buy. Let's make it happen in 5 days, right?
Absolutely. Because the time's coming where that's going to be a competitive situation, right? And if you're going to have days, that's going to add days that you need on that condition of finance. That could, and somebody else, you're saying I need 7 days because I don't have all my ducks in a row. Somebody else can do it in 3 or no condition.
Yeah.
That adds a lot of stress, and that could, lose you a property that you absolutely love.
The other thing I've been seeing, and I'm curious if this is something that you do for your clients, but I've seen where they are submitting a competitive offer with conditions, but it's actually coming with a letter, or even sometimes they'll get the mortgage broker on the phone call to say, no, I have a complete file. I've reviewed this person's information. They've already submitted everything to me. This is a good buyer. They're going to be able to get their financing. We just got to appraise the house. And that brings a ton of confidence to the seller than someone just blanket including that financing condition.
So we like to go one step further. We do a video, right? So I do a video to the sellers and the seller's agent that says, here's what we're looking at. Here's our process. We only give away as much information as what the clients want to. We're not going to say, this is their money in their bank account, but we've got great credit scores. He works at a factory. She's a teacher. This is what their credit scores look like. If you have questions about our process, give me a call and we can talk about our process. I'm not going to give you the details of the individual, but here's my process. I've been doing this for 17 years. I know that we can get these clients approved, right? And we've seen deals fall apart even without a condition of finance on that property. Hey, this is a cash deal. It's not really a cash deal. They're just putting it in there because somebody told them they could get pre-approved. And unfortunately, some of those times is they walked into a branch and saw somebody that was a teller last week and they pre-approved them, right?
And look, I'm in a lot of real estate legal groups, and the absolute worst thing you can do as a buyer right now is make a firm offer and then not close.
Right.
Because you're going to get sued and lose every time. And
Yes.
you're not only now you're going to get sued for multiple 6 figures because you're going to have all the damages from the other seller, but you don't end up with the house.
Yes.
So you literally just get a bill that probably sets you back a decade financially, all because you rushed the process. So please, which camera? If you are not a cash buyer, don't be making unconditional offers, right?
Yes.
You do like we're talking about, you have your mortgage broker make a video, you tighten up the conditional period, you have a full file, but don't put yourself in a situation where you're either going to have to go to the B or C lending market, which is going to just kill you financially.
Absolutely.
Or you're not going to close and then big trouble.
That's really going to kill you financially.
That's going to be the most stressful month of your life.
Absolutely. Sure. Absolutely.
Okay. So let's fast forward then. We got a pre-approved file. We found the house we loved. You have gotten your process done. It's approved. I think it's kind of a gray area. What happens between I bought my house and I'm closing on it from the money side of things?
Yeah. So one of the things that we do, and this is a nice part that we can do now that we're, back when I was in the bank side, if you had an approval at with the bank, we really just hoped you didn't walk into a branch and see the current rates. What we do now, because we're here for the clients, not the shareholders, is we review this every single week. So sometimes if you've got, 6-week, 8-week, 10-week closing, every week we review what's going on in the market, right? So let's say, for example, we took a 5-year fixed rate. Okay. What we do is every single Thursday, we let here's a snapshot of what's going on with the bond rates today and have rates dropped. If rates have dropped, we bring your rate down for you, right? So we're automatically going to float that down. We call it rate insurance. So we're going to insure your rate. You're going to get the lowest rate, even if you bought today. And, let's say, for example, we buy today, 6 weeks out, that housing market might be dramatically higher because we've seen, rates drop, right? Yeah. If rates have dropped, you're getting the best of both worlds. You're buying at a lower price point sometimes and getting the lower rates that are going to be there in 6 weeks.
So you've got it locked in that once you give me a commitment, my rate can't go up.
Can't
you're
go up.
also going to watch my file week after week. And if they do come down, it's a bonus, right? My payment's going to go down or my amortization is going to go down.
Absolutely. Yeah, I gave a call to a client last week. Hey, great news. You're going to save $50 a month.
Hey, yeah, that's
right?
great news.
It's not bad, right? You know,
Yeah.
it's going back to your pockets, not the bank's.
Yeah. It's just, that's a helpful service, again, where you don't need to do that because the deal's already written. But I can see how by doing that, like you're just creating great reviews, great referral opportunities, and you're ending the relationship on a high note. Obviously, it's a great business practice for you too.
Absolutely. Yeah.
And then funding day, that's another stressful day for clients because a lot of things have to happen. Mortgage, lawyer, land registry office, ding, ding, ding. When do I get my keys? Like, what's a day like that for you in closing it from your perspective?
Yeah, it's always different, right? And one of the things we always recommend, I'm sure you do, never close on a Friday, right? We don't ever want to close that purchase on a Friday. We've had different scenarios in the past where remember last year's cell phone service was down for a whole day on a Friday, right? There's no way around. There's nothing we can do, right? So if you close on Thursday, if we have a delay like that, at least we've got the Friday. You're not waiting homeless for a weekend, right? What we like to do is first thing in the morning, we have a conversation with the lawyer. Let me know as soon as you get funds there. Sometimes, especially if you've got a chain of events, right? Like maybe you're waiting on this person to sell and that person to sell.
Dominoes.
There could be 4 or 5 dominoes in effect. So your money might not be there till 4 or 5 o'clock, right? So we monitor that for you though, right? Like we stay in touch with the lawyer so you're not out there stressed out. The realtor's not stressed out. We make sure we track that money to see exactly where it is and we know what's going on all day and keep you updated, right? It's I've been there myself. It's a stressful day. I was like, if you're planning stuff, don't plan renovations Friday night, right? Like if you're moving or on the day of the move, right? Like don't plan that stuff. Give it the day. Always relax. Otherwise, it's just gonna be a stressful day. And I say this, I did it the last house we bought. We had wood delivered on the day, for renovations. The dumbest thing we could have done. But schedule your renovations or your paint jobs, or if you've got somebody coming in, schedule it for the next day. It makes your life a lot easier.
Yeah, that first day you want to kind of just grab a 6-pack of beer, get your keys, go into the empty house and celebrate. Yeah, don't make it
don't make plans. Don't have the movers late in the driveway first thing in the morning.
Yeah,
it never works out, right? Especially if you've got dominoes.
Side of things too, like you can't always control. Like, sure, the deal closed. That doesn't mean those people have moved out yet either.
Yes.
Forget about the money and the lawyers, but if you pull up and they're still in the house, like, what are you going to call the sheriff? Like, you're going to just wait.
Yeah,
right?
You're just waiting,
and that's just it can take a very stressful day, which should be a day of celebration, and turn it into like the complete opposite, just headaches and whatever.
Absolutely.
So, yeah, you want to give yourself some room to breathe on moving day.
Yeah. Take the day, schedule for the next day, schedule for the weekend, right? Make it a lot easier. Yeah.
On a total different tangent, and then we'll maybe come back to some final thoughts. But we were talking about the unique challenges. Like a town like Brantford is changing rapidly, and one of the new, especially entry-level products, is condominiums. It used to be, in Brantford at least, condominiums were kind of an end of life cycle product. It was a place where people downsized into these bungalow condos, but now we're seeing more high-rise construction and definitely lots of it coming in the next 10 to 15 years. So a condo / like an apartment style condo is really going to be that first-time home buyer product for a lot of people.
Yeah.
But there's a whole other set of challenges that come with buying a condo and financing a condo. Maybe you speak to that a little.
Yeah. So one of the biggest things is condo fees. Yeah. Right? So if I'm pre-approved, let's call it a $400,000 pre-approval with, to buy a single family detached home, you're only worried about property taxes, right? Maybe that could be a couple $100 a month. If all of a sudden we're adding condo fees on there, and now these new condos, they've got a lot of really cool amenities, but your condo fees could be $500, $600, $700 a month, right? So that's really going to affect your how much you qualify for. So if you think $400,000 is my number, if you're looking at a condo, that number that you pre-approved for could be significantly lower.
Right, because basically your payment that you're pre-approved for, you have to knock, it's not exact, but you have to knock that condo fee off of that payment because it's considered part of your
and that's part of your housing expenses.
Yeah. So really understanding the condo fees. I know from the legal side, does this affect the mortgage side? They some buildings can be stigmatized if they don't have the right reserve fund.
Yes.
Or if there's been other issues, they'll be flagged too as like problem properties, and you might not even be able to get a quality lender on them.
Absolutely. You always want to make sure, especially if you're looking at some of those older condos or even some of the newer ones, depending on the builder, they could be flagged,
Yeah.
right? There's different reasons. We always want to have that condition of finance when we're looking at condos because, everything might be there. The value's there, everything's there, but the reserves aren't, right? And there's always challenges that can come up that way. So it's really important to have that condition of finance because you never know.
Yeah.
Right?
And this is going to be definitely one of the big topics moving forward. Obviously, people are buying condos in Toronto forever, but I really see, and you can see how much planning applications are coming down. Like there's going to be thousands of new condo units built over the next 10 years in Brantford.
Yes.
And specifically targeted as that entry-level product for people to get into the market. So having a good, even better plan than a single family home purchase, like sitting down and understanding what it's all going to be.
Really need to understand what it's going to be. Because, a condo building on one side of the street versus another side of the street, even if they're the same price, could have, like I said, there could be a different reserves. There could be different condo fees. There's a lot of different things that go into that you need to be aware of if you're looking at financing that property.
I guess the same if you're getting excited, you're going down to a new build presentation center and signing to buy one of these that might be off in the future. I think it's still really important to have that mortgage conversation now just to fully understand it. Because again, if you come to closing date on a new condo and you can't close, that's the worst lawyers in the world work for builders.
Yes,
right? They will take every dime that's owed to them, and you want to make sure that you've got your financial side of you all lined up and ready to close.
And a backup plan too, right? Because these condos don't always close. It's hard to future. It's going to close in 4 years. Well, there's delays sometimes, right? So you need to have plans in place not only for that property if it closes on time, but what happens if it doesn't, right? You don't want to be, where am I going, right? So making sure you have some plans on what's your living situation going to be. When are you going to, if you're looking at selling a house to move into a condo, when are you looking at selling? And that's where it's really important. Like we have a really good team to make sure that you are going to be taken care of on all aspects, right?
This has been, I'm not sure how long we've been talking, but there's been a ton of information. We probably pull out all kinds of little clips, but if you had to really center, like what's your number one piece of advice to someone, whether it's their first home, their investment or whatever, but from the mortgage point of view, what is your, Adam's killer tip?
Yeah. Have a team, right? Don't do it alone. Have a team, right? Everybody likes to think I can click a couple buttons on YouTube or on Google and I can get all the answers myself. There's so much stuff and it changes so rapidly, right? You don't know what's current. Have a team working with you, right? We're here to help all of our clients, whether it's on the real estate side, the mortgage side, the home inspector. There's teams that we've vetted these teams, have a plan, have a team working for you.
Amazing. Have a team.
Yes.
I love it. I give that advice out all the time, and a team that you trust are working in your best interest and are looking out for your file. So you don't have to spend all that extra time. You're like, hey, Adam, where's my file at?
Yes,
right?
absolutely.
Amazing. Hey, thanks so much. This has been really fun. I'm glad we turned a coffee meeting into some education
Yeah.
content, and we'll definitely do it again.